I think some of those stocks are ahead of themselves. And I think the key is talking about whether the stocks are still going to do well after the pandemic or not. So I think companies like Zoom, I mean, business has changed. Clearly, there's going to be less business travel going forward, even after we reopen. It's a new way of doing business. People are going to continue to work from home at least part of the time. So I think business models that are going to be well suited to that will do well. I think if it's something that solely requires a full lockdown, then I worry about some of those business models. Though we mentioned a lot of the mega cap tech stocks aren't really like that. They were already being driven by secular drivers even before the pandemic started. And in some of those cases, like cloud spending, the pandemic has just accelerated that trend.
And you talk about the mega cap growth stocks. What about small cap? Because, I mean, the Russell index I see is up almost double. I mean, it's up 100% since the lows we got to back in March. That always escapes under the radar. But perhaps if investors are thinking about where they can get, the biggest beta in 2021, then small caps is the place to be, isn't it?
The biggest change in the U.S. market over the last couple of months has been a rotation into small stocks. It's been both growth stocks and value stocks, and also that rotation into some value cyclical names. That being said, the market, and particularly small stocks, are actually very extended right now. About 88% of the S&P 500 is above its 200-day moving average. That's about as good as it ever gets. So really, the whole market is extended. We would expect either a sideways movement or a pullback, and that's particularly true in small cap, which, as you pointed out, has really been outperforming the whole market, including large caps, over the last 2 months.